Hi guys, can you hear me? Hello?
Yes.
Yes, Professor.
Okay, alrighty. For a while I completely was completely quiet. Um, all right, let me uh, yes, let me set it up because I was I didn't even know it was past 3 o'clock because I was busy uh, grading homework 3. And I've been discussing this. I've been warning. I mean, if I could call it warning, but I've been cautioning about the verbosity or the wordiness of labels all this time. I've been saying that your labels shouldn't be wordy, but especially homework 3, you labels are so wordy, right? You understand what I'm saying? Um, you don't have to write out everything. Labels must be concise. That's why I use symbols and acronyms. Because if you write out all the labels, then it expands the table too wide, and it cannot be. Uh, it's not a sharp table, right? It's gonna look sharp if you have wordy explanations everywhere, right? I hope and I keep writing warnings about that in my comment every homework, and some of you are still some of you are still like that. Some of you still just have to write out the full story. You don't write up the full story in the label, right? I've been telling you repeatedly, the labels must be concise. So that's why they must be symbols and acronyms. Um, but this is not getting into some people. It has to. I mean, and it's not just the labels. Also, I've been commenting and warning you, cautioning you about using at least 2 to 3 decimal places, because if you don't use 2 to 3 decimal places, then the numbers are rounded, and when they are rounded, then it doesn't make any difference. It won't, because remember, in effective rates, there's a reason why we have effective rates, because they are different from um, the discount rates, and or the quoted rates. So if you don't use so think about it. If you remember from the topic 1 and topic 2, there are effective rates are slightly different from, like if the APR is 6%, the effective rate is like 6.14, and then this difference is very important. But if you leave it rounded, then they are both 6%. And unless let's say you are a bank, let's say personal banker, and you are trying to explain to your client that by the client will get effectively higher rate than 6%. How would you explain that? Because the client doesn't know, client cannot calculate effective rate, or the client cannot look underneath the surface of Excel. I mean, you can look into Excel and see the formula, and you can tell the difference, but the client won't know that. then the only thing that will make the difference to the eye of the client is the 2 decimal places, right? You have to always, keep in mind that when you report something, it has to be concise and uniform. In everything, it has to be uniform. All the explanations must be there must be a uniform principle, and then there must be also the uniform principle must be consistently held through and through. And none of these are with some people it's better. With some people they have improvement, but with some people there has been no improvement in this area. It's always still lack of uniformity, lack of consistency, lack of if you keep doing that, then I have no other choice. I will have to keep penalizing those violations, right? I'll have to keep penalizing those errors, and then they all pile up, and it takes a lot of a huge chunk of my time grading and commenting your homework. It really takes endless work, and still even until we still have 2 more homeworks, and if this doesn't improve, for those people that don't improve, obviously the consequences cannot be good, right? You are losing points because of those those things, and I'm emphasizing the uniformity in structure and the systematic structure and consistency of that, and that's very important, and it's not being observed. It's not being complied. It's not being complied with, or it's not being obeyed. Right? Instructions must be obeyed, or followed, obeyed, complied with, or it must be adhered to. Right? But you are forgetting that. Some of you are forgetting that, really. Right? So, okay, I'll have to. Okay, I maybe the screen setting will change a little because I'll have to. Okay, what's going on here now? Okay, so I also need to. Okay. So. Oh, those cables. I'm sorry. Cables. It's a headache. Okay, too many cables. Okay. And then. Okay, I have really. I need to do a better cable management. So I'll put it on my desk. All righty, and so I'm still going through your homework 3. So you will. I cannot show you, of course. Yeah, but you'll get it at latest by tomorrow. And I need to, what do I need to open? So now we'll move to the next topic. And the next topic is, okay, the course material. Now, pricing and, okay, so pricing. And this is the Excel file we're going to use. And I hope it is, let me see. First, I'm going to have to close this. And if you download it, I need it to be all those. Okay, I hope it is blank. Okay, these cells must be blank. Okay, and so it is blank. And let me make sure I have this file in there in my cloud. Okay, in the OneDrive. This mouse is. Okay, it's taking so much time, as always. Give me a break. Okay, let me try. Okay, I'm trying to. Okay. The mouse is frozen. I'm trying to access the file, locate the file from my other computer. Let's see if I can do that. There it is. Okay. Oh, the thing is, the mouse isn't working. It's full. So I can find the file. I mean, it's right up there. In the on top in the folder, BUS folder, but that's not. Uh, personally. So I'm hoping to, okay, if only the mouse is, okay, okay, so, okay, please bear with me. It's, okay, I think I'll just close the, all right. I think I will just close OneDrive because I think because it is online, it's a cloud. Uh, it's taking so much time, and so oh, now it's moving. I better just close it and use, if possible, open it from. Now it's so. Now it's working. Okay. All right, I got it now. Oh, frozen again. All right, I'm there. Okay, so uh, okay. So these things need to be deleted. Uh, this must be. Why isn't it working? Okay. All right. Okay. So I'll get rid of these one by one. Um, I guess this topic should be a lot easier than the previous ones, but all right. So let's think about. Oh no. Okay. Oh, so let me open. Uh, so let's think about price, right? What is if you remember the income statement? Actually, income statement is the aggregate picture of uh, what's going on with one price of one single item. Okay. Um, maybe I should. I'm gonna close. I'm gonna. I'm gonna close one. It's not even. Oh, okay. And okay. All righty. Now I don't need my Facebook open. Okay, so that should unload. That should unload some uh, burden on the resources. Okay. Um, and I'm still waiting for this thing to open. Okay, let me try to download and open. Let me try to download this. How do I download? Okay, this is horrible. Okay. So let me, so just with me, restarting the computer might take just about 2 to 5 minutes. Let me, oh, now it is opening. Still, I will need to restart anyway. This is going to take, because if it keeps working like this, it's going to be horrible. Where is it? I'll just do a hard reboot. Hard reboot. See you soon. See you in about 2, All right. Okay, it was all right. Let's see if you can hear me. Can you hear me?
Yep,
Yes.
loud and clear.
Good, good. All right. So, all righty. So, okay. That was so. So I'm back here. That was so terrible. Let's see if I can open it just as. I think I have a copy downloaded into this computer. So if I can open it just as a Google Sheet, I think that will do. Okay, I don't think it was downloaded. So, and fine. Let's just give it one more try. I hope it is, okay, there you go. And also, let me, why isn't it? Okay, so let's think about price. We all know price. Price times quantity is total revenue, isn't that right? That's what it is. But think about it. And let me write it this way. Let me flip it. So total revenue is price times quantity, right? And then if that means price is then price is total revenue divided by quantity. Isn't that right? That's what price is. I mean, if the price is $10, price of a certain good is $10. If you sold one, revenue is 10. If you sold 10, revenue is 100. If you sold 100, revenue is 1,000. If you sold 0, revenue is 0, right? So price is simply then, also it can be expressed as, revenue divided by quantity. But if you divide, so that's total, right? If you divide total by quantity, what is that called? If you divide total by quantity, what is it? Come on, guys, you know this. In any, basically in any context, if you divide total by quantity, then that is called, anyone? It's average, isn't it right? Total divided quantity is average. Huh? Isn't that right? If I take the if I take your height data, I measure your height, and if I collect the data, and if I want to know average height, what do I need to do? I will have to add them up, I will have to add up those, height data I collected, and then divide it by number of people in this class. That's so total divided by quantity is always average. So that means another name for price is what? What do you think? What's another name for price? It's called average revenue. Isn't that right? Price is average revenue. Right? And then so nobody's doing any thinking. This is just, and think about it. In the income statement, right? So basically, we understand. Let's in the income statement, from revenue, right? You must subtract total cost, right? And the total cost comes from CGS and operating expenses, right? And CGS is also called total variable cost, which is what? Average variable cost times quantity. Isn't it right? Now, since we are dealing with price, which is average revenue, then let's think about what is so now we'll need to subtract from, I mean, if you sold only one unit, right, then you must subtract cost, but the cost, from revenue, but this revenue is just price because you sold only one unit. Right? What if quantity is just one? So of course, then we'll need to subtract CGS, but the CGS per unit is called AVC, average variable cost, or which is in another name, production cost per unit, right? Production cost per unit. And then there is operating expense per unit. In other words, right? Or fixed cost per unit, right? You can also you can call it average operating expense, right? Average operating expense, and then we arrive at just like we arrive at EBIT, right? This is, then EBIT per unit. We arrive at EBIT per unit. We will arrive at, right? And then we will have to subtract interest per unit and tax per unit, right? Everything has to be, by, in other words, we are dealing with just one unit, right? There's a matching or corresponding concept of every line item in the income statement, right? So, if we look at only, so let me go back to, let's go back to, and I'm sure I have this, I'm sure I have this file somewhere, but let's take a look at this. So if you think about it, price consists of cost. That cost means production cost per unit. In other words, average variable cost, and the rest of it is called markup. In other words, the whole Oh, I deleted it already. No, I deleted. Why did I delete it? So in other words, all the since this is only the production cost per unit, then there is operating expense per unit, interest payment per unit, and taxes per unit, right? And then profit per unit, right? These are all per unit concepts, right? And all of that is called markup, right? So you normally think, if this thing is, 200, if this thing is $300, the actual production cost must be, if the actual production cost is, $200, then you will say, oh, then $100 is the profit margin. No, it's not exactly the profit margin. Why? I mean, roughly you can think of that as profit margin. Um, but to be exact, that's called the seller's markup, or the retailer's markup, or the merchant's markup. Isn't that right? Because if you're buying that thing from a retailer, right? Uh, retailer paid production cost to the manufacturer. The manufacturer, of course, is not only a production cost from the manufacturer's perspective. Manufacturer also has to mark it up. Manufacturer needs the manufacturer's cost would include, their own production cost plus their own markup. Right? Makes sense? So when it comes to the retailer must have paid, probably $200 to the manufacturer. So manufacturer's price is $200, but the manufacturer's that $200 consists of manufacturer's production cost plus markup, right? Production cost per unit plus markup. So when the retailer sells it to you, they sell it for $300, and then to the manufacturer, to the retailer, $200 is their cost per unit, and then the rest of it is the markup. And then the markup breaks down into overhead and profit. Okay? So then what is the overhead? Overhead is operating expenses per unit, interest per unit, and taxes per unit. Okay? So this is the, if you compare it with the income statement, they are exactly the matching concept, right? In other words, I closed it and I deleted everything and I have to write it again. So from total revenue, you subtract total variable cost and total fixed cost. Total variable cost is, of course, CGS. Right? And OPEX. And from that, you subtract. I mean, the result is already EBIT. I don't have to write EBIT there, but what needs to be subtracted. I'm only writing down what needs to be subtracted, right? And then you arrive at net profit, right? Now think about it. This is aggregate. Now we write it by unit. So first, 1 unit, if you sold 1 unit, it's just price, which is called also average revenue, right? And then you subtract. So better write it like this. Price, which is average revenue, which is total revenue divided by quantity. And then, so you subtract CGS per unit, which is cost per unit, right? Production cost per unit. Which is also called average variable cost. You know why? Because it's total variable cost divided by quantity, right? Now, there is operating expenses per unit, and then you have to pay, there's interest per unit, right? In other words, if you divide everything in the left-hand side, if you divide all of that by quantity, then it is per unit concept, right? And then also you subtract taxes per unit. Then you'll arrive at profit per unit. Makes sense? And in from and all of this in the blue box is called markup. But then the markup breaks down into overhead and profit. So this part is called overhead, right? Is that clear now? So please take a screenshot before I close it. So it's exactly parallel to income statement. The only difference is that income statement is aggregate. It's the result of sale of aggregate quantity of inventory or merchandise. Income statement is basically an aggregate concept, right? You make 1,000 units and sell 1,000 units, or 10,000 units, sell 10,000 units, make 10,000 units and sell 10,000 units, right? So it's aggregate concept. But if you divide it by quantity, then it's per unit concept. So when we look at the price, it's a per unit revenue, right? So average revenue, and it consists of exactly the same line items, right? Or that matches the income statement or the corresponding line items, right? So overhead must be, able to support operating expenses per unit, operating expenses, interest, and taxes, right? That's the concept of, okay? So then So basically, price, as I said, the big picture is the price consists of cost per unit and the markup. The markup is based on the markup rate. So merchants mark up their products, of course, by percentage, but it is either by either that markup rate is either based on the cost or based on the selling price. Okay, so if the markup is based on the cost, right, I use the symbol MC. That means markup based on cost. Okay, markup based on cost. Or if it is based on the selling price, right, MP, markup rate based on selling price. So think about it. If you have, if you have something like, $500, if you're selling something, a computer, that's $500, and its cost is, this is not a very good example. If the cost is $200, then $300 is the markup. That's a lot of markup. Usually it would be the other way around. $300 cost, $200 markup. Then you can think about it. You can express that markup by the percentage of the cost. So in our example, 300 is 150% of the cost, right? So it will be like that. But usually, if I make it more realistic, it would look like, okay, so if you have taken already a picture of that, screenshot of that, I'm gonna delete it. And then, so think about it. If the price, since price is per unit cost, production cost per markup, and if the, the price of the computer is $500, and let's say its production cost is $300, we know that the markup is $200. Then think about it. $200 is some percentage of the cost. So this is not a difficult thing, right? So that's, and if we factor out this is like 2/3. So 2/3 is 2/3 is like 66 point. So let's say 0.67, right? Then we can. So this is the markup rate based on the cost, right? 66.67%, right? I just rounded it to 67% because we all know 2 divided by 3 is 0.6667. Of course, it keeps on going. We'll just have to round it up at some point. And then we can factor out the common factor. Common factor is 300. If we factor out 300, then this becomes 1, right? This becomes 0.67, right? If we generalize this, because this is C, right? It's going to be C times 1 plus markup rate based on cost. Okay, that's one way we can represent it. Or if the we can also express it we can also express it by markup rate based on price. The same example, this is the same example, but we can, so let me delete this, and then the same thing can be expressed as, let's say, cost is, price is 500, and the cost is 300. Markup is, of course, then 200. Now, instead of using cost as the base, let's use price as the base. Okay? Then, 200 is, think about it, then 200 is right, or which is 0.4, right? So this is, so in this case, if we use price as the base of the markup, right? Because this is P and this is P, right? We need to, and this is C, we can express C as P minus, okay, I'll just put, I'll call this dollar markup, not the rate, but in dollars, dollar markup over P, which is, 0.4 or 40%. And this, another name for this will come out as the rate. So I will call that markup rate based on price, right? Markup rate based on price. In other words, this ratio, ratio will be the markup rate based on price. So then it can be rewritten as, if you factor out P, is going to be 1 minus markup rate based on price, right? So this is the way to find, or this is the way to guess or estimate the cost. And so remember, it's all about cost, actually all about estimating the cost. We want to estimate the cost, true cost. Especially IRS is interested in estimating the true cost, because although all businesses, when they report taxes, they all claim, of course, the companies don't do that. Third party, independent accounting firms do the audit on behalf of the IRS. So basically, the accounting firms are responsible. They are responsible to make this tax report honest and true. But they all have incentive to cheat, even by a little. I mean, because they all have incentives to save on taxes, right? So IRS generally would accept the opinion of the independent accounting firm because accounting firms put their neck on the line. Think about it. Accounting firms, if they are not if they are not reporting, let's say the company has done very fishy reporting. The company has done very dishonest reporting of taxes, and IRS doesn't have time and resources to go after every company. So that's why accounting firms, CPA, you know, uh, accounting firms are doing the tax reporting for these businesses, and then if they but think about it. Um, so if the accounting firms are not representing correctly, if they are not reporting correctly, I mean it's the company that is reporting, but the accounting firm has to represent them correctly. And if the company has done something dishonest in tax reporting, and accounting firm must filter this. That's their role. They must say and if and then their opinion, the accounting firm's opinion about this firm must be neutral or positive. I mean it shouldn't be negative. It shouldn't be something negative. But then if they are uh, if they are not filtering out this, if they are not screening out this, then the accounting firm will lose their license. It's not only losing their license, someone in the accounting firm will go to jail, because it's a very harsh crime, right? Cheating on taxes is a very harsh crime. um, serious crime. So so accounting firms are putting their neck on the line. But accounting firms, think about it. Accounting firms are not being paid by IRS. Accounting firms are being paid by these businesses that hire them. Then think about it. If they are being too strict, I mean, accounting firms have the responsibility to act on behalf of IRS, but they also have to serve the interest of the company that they are auditing. Isn't that right? If they are too harsh, they will never get the job again from that company. Does that make sense? Huh? So then the accounting firms are tempted to uh, work in favor of this business, because then they will keep being recalled every year. They are going to be called back every year, right? Accounting firms must make money too, and if they lose their client, then uh, by being only serving uh, the by only serving the interest of the IRS uh, and not serving the interest of their client, then they will lose their job. They'll lose their business, right? They'll lose their client. Okay, so it took so much time. So um, think about it. One way you can estimate the true cost is by, if you know what is the markup rate, either based on cost or based on price. One way we can, if it is based on price, markup rate is based on price, we find it this way. Another, again, if the markup rate is based on cost, right? I've been telling you, price is cost times 1 plus markup rate based on cost. If this is the case, then cost is price over 1 plus markup rate on cost. And if the markup rate is based on selling price, the cost is already, we already know, we already found that. If cost is, markup rate is based on the selling price, right? Cost is price times 1 minus markup rate based on selling price. Also, we can, from this, we can find the cost ratio. I mean, looking at the price, in our example, it was price was $500. Cost was $300. Markup was, dollar markup. Markup was $200. And think about it, the cost ratio is 60%, right? What is cost ratio? So cost ratio is simply, cost divided by price. How much of the cost is, again, if you know the cost ratio, you might think, if you know the markup rate, if you know the cost ratio, then isn't it obvious that you can what is the cost? Again, these ratios are just estimates because no company will tell IRS. No company will tell IRS or to you or to whoever. I mean, to their competitors, they won't tell the cost ratio. Cost ratio is, or the markup rate is, their business secret, trade secret, right? And obviously, nobody will, right? No business will reveal their trade secret to anybody, right? To their competitors or to IRS or to the customers, right? That's just out of the question. So if you use so these are all estimates, right? And we start from there, because if you are auditing, if you're think about it, audits are IRS audits are a serious thing because audits are basically primarily audits are done by the accounting firm, and that audit is not a serious thing. They are just making sure that your income statement is correct and your taxes are correct, right? That's what audit means. When that means they are checking the accounting firms because they are outsider as a independent third party. They are checking if it is correct. But if IRS doesn't buy that, then IRS will go after. The IRS will go after that company, and if they go after that company, then that's IRS doesn't have, once again, time and resources, to go after every company. That's why accounting firms are doing it on behalf of IRS. But if once IRS is, has targeted some company, and the starting point is this estimate. Based on this estimate, is it deviating too far from that estimate? If it is deviating only slightly, it won't be a big deal. But if it is deviating too far from the estimate, then they will go after. Then that's IRS audit. Then this is a trouble. This is a big deal. So anyway, by using cost ratio, the third method to estimate the cost is then simply price times cost ratio, right? And if you think about it, the cost ratio is the, uh, uh, if you think about it, cost ratio is 1 minus MP, markup rate based on, um, right? That's exactly the cost ratio is actually 1 minus markup rate based on selling price. That's the cost ratio. Isn't that right? Exactly. Uh, in our example, if the selling price is 500 and the dollar markup is 200, we know that's markup rate based on the selling price is 40%. 40% of the selling price is the markup. Then that's the other part, 60%. That's the 60% of this 500 is the cost. So cost ratio, 60%, is exactly uh, the other side of the markup rate based on selling price. Okay. Oh God, I think it's so. We spent a lot of, we wasted a lot of time because I had some, connection issues. So about at least about 15 minutes were wasted. Um, okay, so I think it's a good time to take a break. It's 4:20, right? Where am I? Okay, so let's take a 10-minute break. Everyone, I hope everyone is there. It's awfully quiet, so nobody answer to any of the questions. So,
Yes, we're still here.
okay, all right, good. So let's take a 10-minute break at this point. Let's take 10 minutes. All right, we're back. We're back. So let's do let's do some examples, right? So this is you know basic, very basic example on markup. So basically, we are trying to figure out the true cost based on it's estimate still, because the rate markup rate is also estimate. Um, um, so I want you need to open this file. You need to have this file open, and always remember, I keep saying this, but in the homework, then students, a lot of students cannot make distinction between the markup rate based on cost and markup rate based on price. Think about it. Based, what it is based on makes a whole difference. First, um, let's take a look at this example. It's the price of the good is $2,500, and its markup rate based on cost is 35%, right? And what should be the cost? Remember, okay, here. If the markup rate is based on cost, right? This is, how you find the cost. I mean, think about it. Markup rate, if the markup rate is based on price, basically price is C times cost times 1 plus markup rate. So then if you solve this equation for cost, then it will have to be it will have to be cost equals P over 1 plus MC, right? And for markup rate based on selling price, cost is directly, the way it is set up, we are solving for cost directly, right? So this is the cost when, markup rate is based on cost. This is how you find cost when markup rate is based on selling price. So with that in mind, okay, then cost must be price divided by 1 plus, right? Which is, not a difficult thing. But the thing is, if you mix, you need to use consistently. Consistently, you need to use two-column method. Two-column method. What's two-column means? In the examples, in the problems, they want. I mean, it's all verbal, right? It's verbiage, and from the verbiage, you should be able to distinguish markup rate based on cost from markup rate based on selling price. You should be able to distinguish between them, right? And then correctly put them in their right place, right? Some people cannot, distinguishing, the ability to distinguish or discern, that's a very important ability, because making distinction, right? That's the work of the brain. And if you're weak, right? If you're weak in that department, then you are very poor at making that distinction. And a lot of students, mix them up. They just simply mix them up, and they can't tell the difference. So then, this is a very simple. Think about it. Math is very elementary. Math itself is very elementary, but then they get it all wrong because they are very poor at this ability of making distinction, right? So that's very important. You should be able to make distinction from that verbiage of the problem. Now, the second example, price is $1.50 and the markup rate is based on selling price. Then what's the formula? It's, P times, I mean, it's not even the formula. I mean, if you think logically, this is the only way it can be, right? If you think logically, right? And there you go, right? And this one, again, markup rate based on, no, you don't need to do the whole thing all over again. You can just copy and just, paste. Okay. Of course, once it's done, then, don't forget to do the housekeeping, right? The bottom border was gone because this formula was copied and that cell had no bottom border. So you have to make it neat, right? You have to. Now the next question. Now this time we are figuring out the price is $600, cost is $400. Then we can figure out markup rate in both based on cost and based on selling price. Markup rate based on cost is so first think about what is the dollar markup. Dollar markup means what is markup in dollars. And oh well, that's $200. I mean, is this difficult? I mean, this is a piece of cake. This is like elementary school. Now then, what is that dollar markup in based on cost and based on selling price? Of course, then it's this divided by cost, right? That should be 50%. Of course, $200 markup is 50% of cost. And then based on markup rate based on selling price, that $200 is almost like 33.33%. Right? Okay. And don't forget to use 2 decimal places, right? Always, in this exercise, I didn't use it, but, it was already, just rounded up like that. And if possible, don't forget, right? At least 2 to 3 decimal places, right? Okay, the next. The markup rate based on cost is 35%. Now, what should be the price? Remember, this is the formula for cost when markup rate is based on based on cost. Then price is what? C times this, right? If you solve this for price, C times this. Then all you need to do is, okay, C times 1 plus markup rate based on cost. You hit enter, right? And then dollar markup is the difference between the two, right? The dollar markup is the difference between the two. Okay. Also, you can do it this way as well. I mean, we know dollar markup is markup rate based on cost is 35%. So dollar markup must be 35% of is 35% of cost. There you go. And then again, this can, if you solve this first, then you can, price should be that plus cost plus dollar markup, right? Dollar markup, or vice versa. I mean, I prefer, I would rather prefer, this. First doing it by this, right? And next, here. Price is 14. Markup rate is 40% based on cost. Then, cost is what? Oh, then price over markup rate. And then dollar markup is, obvious. It's the difference between the two. So I'll just, drag it down because that's the formula there. Okay, it's the difference between the two. So if anybody says, I'm confused, please, when you say I'm confused, before you say that, be very careful and thorough. You may be really confused, but this is very, so far, nothing is that difficult. It's very low level math. And all it takes is logic. It's just logic, right? So far. And then maybe, you might think, saying, that's honest to say that you're confused. Good, fine. But, when you are in elementary school, middle school, you can say I'm confused, because you're still, a little kid. But already from high school, I think you should be very careful to say I'm confused. That means you are inferior to others who are not confused. Isn't that right? It simply means you are weaker, intellectually weaker than the group that are not confused. Then out of 100 people, if you're the only one confused, then there's nothing wrong with 99 people who are not confused. Right? If you're the only one person out of 100 that's confused, then something's wrong with you, not with the other 99. So that means that requires more effort is required on your part, more effort to understand it. More effort to understand it is required on your part. Of course, you can say, of course, you don't say, I'm confused in public to everybody. You can approach me, personally and privately. You can say, I still don't understand. Can you, explain this one more time? That's fine. Of course, that's perfectly, but then, some people, I'm just, talking about some people who are just openly saying, I'm confused in public. Now, here's the problem. If you say, suppose you have a job, and suppose you're working in a corporate, in a corporation, in a corporate structure, and where you have to understand it's very competitive. I mean, you have to get ahead of the others. Everybody is trying to get ahead of the others, so it's a competitive environment. And nobody says I'm confused, but you are saying I'm confused to your boss, openly, in front of everybody. How does that reflect on you? Think about it. You may approach, even if you approach your boss privately and say, I don't understand, I'm confused. Still, that doesn't look good on you. Why? Because your boss will judge you based on that. If your team consists of 10 people, out of this 10, none of them except you came to the boss saying, I'm confused. Right? But only you came to the boss and saying, I'm confused. Then obviously that will make you look inferior to the other people. I mean, intellectually weaker than other people in your team. So still the same thing. It requires a lot of more work on your part. It requires a lot more work on your part to be on par with the other people, right? You're not, when you're saying, when 99 people are not confused, and if you're the only one confused, then you are not par with the other people. You're not even par with the other people. That means you're subpar. And then, the problem is with you, not with the 99 people. You have to understand that. And so, once again, um, and none of, so far, none of you are like that. But when you are approaching, uh, it's possible you may not yet understand, and you can approach your boss privately and say you don't understand uh, yet. But that will still, because this is, if your boss is a nice person, he will just try, he or she will try to help you out, just a little boost. But if you keep doing that, they will judge you based on your abilities. And if your ability to make distinction, to understand, to comprehend is behind other people, obviously you are not in a very good position to keep the job, right? Um, so just keep that in mind. Of course, if you're at work, uh, most people will be more discreet about something like this, and they will make efforts to make up for their uh, lack of abilities. Uh, but being uh, if you think you are still having difficulty understanding this, then you need more efforts. That requires more efforts. Okay. Because as I said, math is the math being used here is very low level math. Then what's at stake is the logical thinking ability, right? It's the logical thinking ability, right? And if you again, all right. Now this time, cost is markup rate is 25%, but that's based on selling price, not on cost. Cost is like this. So think about it. What was the formula for cost in? But we are not looking for cost. Cost is already given. But what was the formula in the case of this is the formula for cost when market rate is based on price. But our question is price. Then what do? Always, I've been telling you, z equals x times y structure. You must identify z equals x times y structure. And as long as you can identify that structure, you can solve for anything. This is still z equals x times y structure. So then if you want to know x, then what do? Z divided by y. So therefore, if that's the case, right, finding price, okay, that's a, so that's not a difficult thing. Let me, so this is how you find, cost when the markup rate is based on price, selling price. Then to solve for P, it's C over 1 minus MP, right? It's just logic, right? Math is very, low level. So C over 1 minus MP, okay? So then and check if the story adds up. Because if this is price and this is cost, if price cannot be less than, price cannot be smaller than the cost. Isn't it right? So if this number, I mean, this is in the homeworks, right? As I grade the homeworks, a lot of things are not logically adding up because you just do it mechanically and you don't check, right? You have to verify, you have to check if the story adds up. What does that mean? In a situation, something like a situation like uh, this price being less than cost, that cannot happen because logically that cannot be, right? Nobody sells below their price, and the markup rate is positive. No markup rate can be negative. I mean, who's gonna mark up negatively? Huh? Negative markup rate means you are selling below your price, selling below your cost, and no merchant, no business will do something like that. So again, this exercise is not that difficult, but it's all about um, uh, making distinction between markup rate based on cost and markup rate based on selling price. Okay, and so keep in mind this two-column method. This will be brought up over and over again as we have only 2 more days left. But I don't know how much I can cover, but I have to cover all the way up to depreciation. Hopefully, I can go into depreciation. That's such a long. Okay, inventory estimation. Let's go into this. The reason we were doing this was because of inventory estimation. And why? Look, as I've been telling you, if the company knows their own true cost, but it is it's a big question. I mean, if IRS suspects that this company is not this company's tax reporting is not genuine, if there's some, then they will go after. And what is the starting point? The starting point is the a markup rate, right? So that's why I'm saying, that's why it's called inventory estimation. So let's think about this. First, we have beginning inventory of this, net purchase. That means net purchase, right? You all know that what that means. Net purchase. Oh no. Okay, what you can do is you can do and highlight this and then merge. Okay. And so we understand beginning inventory plus net purchase is GAS. And then what happens next is sale. Sale means revenue. So here I told you CGS and revenue are two sides of the same coin. CGS and revenue are two sides of the same coin. So that's why the cost side of the revenue is CGS, right? The price side of the CGS, the price side of the cost is revenue. Price side of the CGS is the cost. So here you have revenue data. Now think about it. If you are investigating a company that is, suspected of, tax fraud, you will collect data, and the data would be, income statement and ledger and journal and everything, and sales data, the revenue, is very obvious, because as long as you use, I mean, if it is cash, they can, even if it is cash, the cash register will record it. But they can, um, uh, uh, they can do something to the cash register. Probably, they throw out the roll of paper, right, where the things are printed. They deliberately throw out the roll of paper. I mean, a lot of businesses that are accepting only cash. What's the reason? There are, especially restaurants, in the uh, tourist district, like Little Italy, uh, Little Italy, Chinatown, or there are restaurants, pizzerias, or sandwich places. Uh, Cats. I wonder if it was Cats, but the pastrami sandwich place. They don't take credit cards. Only, we accept cash only. Why? Because there's no record of sale. If you receive cash, then there's no record of sale. You can hide your revenue. But as most businesses, they take credit card, and I mean, you you can't imagine Target or Walmart or Whole Foods, cheating with their revenue data. I mean, some people pay cash, but everything is recorded, right? Everything is well recorded. Um, but small mom and pop pizzerias, if they take cash, that doesn't go reported most of the times. Um, so revenue is, so that's why, look, this is the two column method. Think about it. Why do I have two columns? Because you cannot mix this with this. You understand? That's why the label is CGS/sale. Because what does that slash mean? One column, that's cost. This is CGS. The other column, that's revenue. Right? And everyone understands that, huh? I'm saying this over and over, but revenue and cost are two sides of CGS, are two sides of the same coin. I've been saying this over and over, right? CGS is the cost side of the revenue, right? Revenue is the price side of the CGS. Okay? So that's why I also told you, that's why CGS is also called cost of revenue. So we need really two columns, because these numbers cannot be mixed, right? You cannot put revenue here, and there is a reason this is a blank. Why? Because inventories are recorded in cost for tax purpose, right? Manufacturers all manufacturers' inventories are basically all in cost. Retail businesses inventory can be either reported in selling price or in cost. But again, for tax reporting purpose, it has to be in cost, right? So here, then if that is the revenue, and if the cost ratio is 60%, then cost ratio is given. That means 60% of this revenue is cost. That is not a difficult thing. All you need to do is cost ratio times, right? And then I want to, okay, all right, there you go. Oh, what happened? Cost ratio B5. Oh, no. It's B6, I'm sorry. B6. Okay? then now I can have ending inventory. Ending inventory is what? So beginning beginning inventory plus net purchase, and that's called what? That's called, GAS, isn't it right? Beginning inventory plus net purchase. That is GAS, and minus CGS, and that's ending inventory. We can find, so if, and remember in income statement, the order is not like this. In income statement, they are actually switched. Do you remember that? In income statement, ending inventory is here, CGS is here. And I told you it's because CGS is the conclusion of the section, right? So, but chronologically, this is the correct order. And then, by looking at the ending inventory and checking it with their income statement, and see what their ending inventory is, and if it is significantly different from this, right? That is, a red flag, right? The red flag will go up. CGS as well, if they're declared the CGS is significantly different from this, the red flag goes up, right? The next cost ratio is, in this example, cost ratio is given, but not are you guys doing this with me?
Yes.
Okay, good. Because if you're not doing this at this time, then there won't be another time, right? So you need to make the most of it. So here now, inventory is expressed in both cost and retail price. So and that's called retail method, because retail can express their inventory in, but for tax purpose, tax reporting purpose, they must report in cost. And then here, markup rate. How did I find? It's not given. It was previously. It was given. Previously, it was given. As you can see, this isn't just given. It's not. Okay, this is given, but this isn't given. How I figured it out? How? Of course, it's weighted average, isn't that right? It's weighted average. In other words, if you sum this and divide it by the sum of this, right? That will give you the cost ratio. Okay, so that's what I did. I summed this and summed this, and because this is the cost side, divided it by this. And based on that, I can figure out, right, what the CGS is. Oh, and okay, so we got that. And then ending inventory in cost, ending inventory in cost, sum of those two minus this. And you can do the same thing. You can simply copy and paste it over to the right, and then the same thing, of course. And then let's check if it is, also 58%. I mean, if this is, of course, that would have to be 50, same, cost ratio, right? You divided this by this. That's not dollars. We know that should be percentage, and looks like it's going to be, right, exactly the same percentage. You do the same with, exactly it should be the same percentage, right? Through and through. Um, okay. Now one more, two more, and this is, I cannot let you go, until we do this. So here's the real retail method thing, but now this time, so I don't know why. Oh, this is the one. I think this is the one. Okay. Remember, I said, retail businesses can express their um, inventory in price, but we have, so what is the ending inventory? It's simple. Well, sum. Oh, it's not there. Why is it going in there? Sum these two minus CGS. There you go. That's the ending inventory in retail price. You see what, two columns, this column is for cost. So markup rate based on cost, I put it here. If I had put it here, that means that's the markup rate based on price. But it is put here. So what should be the ending inventory? Oh, if it is based on cost, right? The cost is price divided by 1 plus markup rate based on cost. Okay. There you go. Right? That has to be the, and also make sure if this is, if the markup is 40% of the cost, I'll just check. This is, that's the markup, right? And then you divide it by this. 40%, exactly, right? 40%. So it checks out. Now, our last example, this is very important because your homework, this is one of your homework problems. Yeah. So this is something about tomato. In the example, so you go, you know where to find the example, right? In the assignments, there is right, practice examples, right? You can find it from there, right? We'll just take a look. It's all the way in the back because this would be yeah, it's something like this. I think it is. Somewhere here. Yeah, it's this. Elros owns a fruit and vegetable stand. He knows that he cannot sell all his products, so all his produce. Read it later. So this guy owns a some fruit and vegetable store, and he bought tomatoes, 300 pounds of tomatoes, right? And that's quantity, 300 pounds. And unit cost was, that's cost per pound, right? 0.14. Then what is his CGS? Of course, we know what is his CGS. Cost. Okay, that should be his cost. And his markup rate based on cost is 60%. His markup rate based on cost is 60%. So if he sells everything, what is the revenue? Oh, revenue is basically, price, isn't that right? Revenue is, price times quantity. So same concept. When markup rate is based on cost, what is price? Price is, CGS over, CGS times 1 plus markup rate based on cost. Okay, there you go. That should be the revenue. However, it's vegetable, tomatoes. You cannot, if you can sell quickly, but let's say you can sell all of them, 300 pounds, but, if your inventory is there for, if your tomato is there for like a week, some of it will spoil. It's fruit, vegetable and fruit. So on average, spoilage is 5%. So considering the spoilage, what should be the, what should be the unit price? Considering the, in other words, you want to compensate without spoilage, right? With spoilage, you want to compensate for the spoilage. So then, what do you have to do? So basically, then normally unit price will be simply this divided by 300 pounds. Isn't that right? Normally it will be this divided by 300 pounds. But it will be because 5% is spoiled away. So okay. In other words, you'll need to spread this over. You'll need to spread the revenue over 95% of this. So that will make 95% of this. Isn't that right? Some people might say, why don't you just multiply it by 0.95? This is something I've been stressing all the time, over and over. You don't input manually any number. Why? If you input 0.95 there, you cannot reuse it. What if the spoilage is not 5%? What if it is 10%? Depending on weather conditions, and this year it was extremely muggy, humid, and then the spoilage will go up. All you need to change is this number, not the formula. But if you put any number, if you input any number in the formula, right, manually, then you will have to change the entire formula. You cannot reuse it. So if you do it like that, there you go. It has to be 24 cents per pound. But if there was no spoilage, of course, if there was no spoilage, then it would be simply, right, 22 cents per pound. Okay. All right. I think you should really focus on inventory estimation, right? because that's going to be your next homework. All right, so that's it for today. That's all the time we have. So have a great evening, everyone, and I will see you guys tomorrow. We just have 2 more days now. All right, take care, everyone. All righty, so.